Focus. Ideate. Innovate. Enable.
Hello and welcome to Incredible Journeys, Brands and Leaders, our special series that puts the spotlight on some of India's most popular brands and brings you face to face with the leaders behind them. On the show today, we are exploring New Delhi-based SIS Group that's a market leader in offering security services, cash logistics and facilities management services. It's a company that has a turnover of over 7,000 crore rupees and employs over 2,10,000 people around the world. Take a look.
1985 में पहली पीढ़ी के उद्यमी आर.के. सिन्हा ने सुरक्षा एजेंसी बनाने के लिए एक विजन के साथ SIS ग्रुप की नींव रखी, जो मुख्य रूप से पूर्व सैनिकों को रोजगार देता है। उन्होंने इसकी शुरुआत तब की जब लोगों ने ऑर्गेनाइज्ड सिक्योरिटी सर्विसेज के बारे में सुना तक नहीं था। यही नहीं, तब कंपनी ने सिक्योरिटी सर्विसेज के साथ साथ सुविधा प्रबंधन में भी बदलाव लाया। आज SIS ग्रुप एक मार्केट लीडर और वैश्विक ताकत बन गया है। इसके अत्याधुनिक परफॉर्मेंस मैनेजमेंट मॉडल ऐसे डिजाइन किए गए हैं जो विभिन्न कॉर्पोरेशन, इंडिविजुअल्स और होम ओनर्स की बदलती जरूरतों को पूरा करें। अपने पिता के नक्शे कदम पर चलते हुए 2002 में ऋतुराज सिन्हा अपने फैमिली बिजनेस से जुड़ गए। ग्रुप के मैनेजिंग डायरेक्टर के रूप में जुड़े ऋतुराज ने अपने कुशल नेतृत्व के जरिए बिजनेस को नई ऊंचाइयां दी। ऋतुराज के पैशन और विजन ने कंपनी को एक नया आयाम दिया।
And now to tell us more about the incredible journey of SIS Group, I'm joined by the group's managing director Ritturaj Sinha. Ritturaj, welcome to the show.
Thank you for having me.
Let me start with the numbers first. You were at about 5,800 crores, a little over that in terms of annual turnover. That was about a year ago. Today, where are you? What has the growth rate been like in the last couple of years?
Well, it's been a good year for us. We're happy to report that we closed financial year FY19 at roughly 7,100 crores of revenue, which makes us $1 billion entity. Overall it's been, averaging around 20% year-on-year growth for us for the last 3 to 4 years.
Wonderful. And how big is the India opportunity? And today you're not, the company started out in the 1970s, established by your father as a more security services agency. But then today you're into cash logistics, you're into facilities management. What else?
Well, SIS is completely transformed. We are now a market leader in security, in cash logistics and in facility management. If you look at it from a market position standpoint, we are India's largest security services and solutions firm. We are the second largest in facility management and the second largest in cash logistics. When it comes to sort of the opportunity ahead of us, I would say that, even as we are the largest in security, we are only about 4% market share. So I think the real opportunity that lies ahead of us is to build on this market share.
Fine, fair enough. And as far as your three verticals are concerned, security services, facilities management, cash logistics, how do you divide the capital allocation and what sort of a share do these verticals have in your revenue mix?
Well, let's cover off the revenue share question first. Roughly 85% of our revenues is security. Okay. Another 13% to 14% would come from facility management. And cash is a very small set. In fact, cash is a minority shareholding for us. Right. So the revenues are not really consolidated in our overall books. So that's on the revenue part. Right. As regards to capital allocation, we have predominantly, when it comes to capital allocation, two rules. Number one, organic focus, and number two, India focus. Right. So our businesses, as they grow, they require a reasonable degree of working capital support. And these are rapidly growing businesses. Our security business in India has been growing extremely rapidly. Facility management has had over 30% year-on-year growth. Right, right. So primary focus is supporting the organic development through working capital. And then when it comes to M&A, we have an India focus. Okay. If we have to spend $1 on M&A, we try and keep it to India first, because that's where the consolidation opportunity really lies.
But you have acquired some companies in New Zealand in the recent past. What was the strategic thinking behind that?
We don't see that as a progression into a new market or something. We see Australia and New Zealand as one market.
Right.
And we are the market leader in Australia with roughly 20% market share. And when you see the tendering process or the buying behavior there, a lot of these large corporates were actually buying or procuring for Australia and New Zealand.
Right.
And we could not bid for the New Zealand bid because we didn't have a presence there.
Okay.
So our entry into New Zealand is predominantly to service existing customers in New Zealand, which are a large part of Australian companies who have New Zealand operations, and also to be able to bid for these regional tenders, which are Aus-New Zealand type contracts.
Right. Okay. Okay. So currently you're present in 4 geographies. You're in Australia, you're in New Zealand, India, Singapore, which has been the toughest market to crack. And in your revenue mix, I'm assuming are domestic markets pumping in more money, or how?
Yeah, majority of our revenues now is coming from India. But when it comes to the difference between these markets, I think if you see an Australian environment or the environment in Singapore, those are more organized markets. 80% of the industry is with compliant organized operators.
Right.
And that's largely because the labor regulation is very standardized. There is a high degree of compliance orientation amongst service providers and service users. Contrast that with India. India has roughly 40% organized market. But with things like, GST coming into play, labor reforms which are on the anvil now, I think these are all steps in the right direction. They will help regulate the labor environment better.
Right.
And a more level playing field in the labor markets means that the organized and compliant players have a larger addressable market. They have more opportunity to grow and scale. Right.
Okay, and talking about those budget announcements that you just spoke of, labor reforms, 4 labor codes coming up in the near future, what's been the biggest challenge? Is labor your biggest challenge, considering security is a segment that really is labor intensive? What else is on your wish list for the government as this new financial year goes on?
I think the government has shown clear intent to do more for sectors which are job creating, skill development oriented sectors, and there is reasonable degree of tax breaks that have been made available to help compliance. There's been PMRPY and various other schemes that have been announced.
Right.
Overall, I think the government is taking the right steps. It's for the industry now to sort of get its act together, and we are quite bullish about labor code and its implications for the transformation of the Indian security and FM market into a more organized and more compliant environment, which actually opens up great apertures for us.
Great. And as far as the GST is concerned, it's about 2 years since it was implemented. What has the impact been like, and are you through with the early teething challenges of implementing GST in a big way?
Yeah, I mean, GST for us is a very positive development. It has definitely pushed our sector to get more compliant. SIS, like most other entities, did have trouble for maybe a quarter, adjusting to the new regulation, the new filing systems and various other things that happened. But now it's clearly bedded in, and we have moved on.
Great. That's good to hear. But if you were to put out your USP across these 3 verticals that you operate in, what is that unique selling point? What's your differentiating factor that has helped you scale up in such a big way, where your competition is really struggling to achieve scale?
There is no major barrier to entry to this sector. I mean, anybody could technically set up a security or a facility management enterprise quite easily. The real challenge here is scalability. There are 15,000 licensed private security companies in India, but there are 2 security businesses which are greater than 3,000 crores in annualized revenue.
Right.
So the clear barrier is to scale. And what SIS has focused on in the last many years is to build very robust systems, very repeatable business processes that allow a high degree of productivity and standardization, both internally and for the customer who is the user of the service. So we've invested a lot in systems, we have invested a lot in re-emphasizing and continuing to build our culture. And I think this unique blend of systems plus culture is probably our special sauce to our scalability, if I could call it like that,
All right. So on that note, we are going to head into a short break right now. On the other side, we'll continue the conversation with Rituraj Sinha of SIS Group and find out what makes this company an incredible one. Stay with us. Welcome back to Incredible Journeys, Brands and Leaders. On the show today, I'm in conversation with Rituraj Sinha, the Group Managing Director of SIS, a company that's a market leader in security services, also offers cash logistics and facility management services. Rituraj, we've spoken a lot about your market presence, your presence in India, overseas. Let's talk a little bit about technology now. And I know that SIS is a group that takes technology very seriously. So take us through the sort of digital transformation that you've done in the company. What areas have you really adopted technology in a big way, and what's the impact that you've been able to create?
We are using technology to solve very interesting challenges that our customers face. I mean, in the oil and gas sector particularly, we've done a lot of work around city gas. India is moving towards a city gas, piped gas to every home type environment, and then you have to keep this gas pipeline safe and operational. So we are doing a little bit of O&M plus security plus emergency management type solution for major customers in this space, which involves not just the manpower but actually mobile apps for tracking and reporting instances. We have NFC tagged all the markers, created maps with all the pipeline and layout so that we can track security around them. In pipeline security, we've started using drone technology in parts. So I think there is a lot that we are doing now with marquee customers to solve their challenges in very innovative ways. And
in that sense, technology is kind of opening up new revenue streams for you as well?
Well, technology is opening up new revenue streams for us. It is moving us to a solution environment. It is moving us from into a higher margin service offerings play. But more importantly, what it's doing for the customer is it's helping the customer to solve their problems and move security from a cost to more of a loss prevention. Where they're investing in preventing losses rather than keeping security to act on incidents. So I think it's a very interesting time, and we are learning with customers, and what we are trying to do is to solve and scale.
Interesting. And as far as your own business operations are concerned, whether it's your sales force, whether it's your customer facing, the whole customer experience team, are they also using technology in a big way, and any impact on the bottom line as far as increasing productivity and profitability?
Absolutely. I think that productivity enhancement is a very essential focus area for us. Also, without technology use in an operationally intensive environment like ours, you couldn't ensure quality for the customer. So we invested greatly in automating our internal processes, how we recruit. It's now done on a platform called ARC. Training is done through a software called M-Trainer, where we track vehicles, they go to sites, they deliver training, we do attendance, various other things. Operations is done on a mobile application called iOps. For Salesforce management, we have SalesMax. So these are a lot of proprietary softwares which are built within SIS over the last many years, basis our learning, and they have helped greatly in enhancing productivity. And the essential goal is to increase revenue per branch. More revenue per branch has a direct implication for the bottom line. So I think higher productivity, more revenue per branch is clearly playing out in the facility management space, in the security services P&L. And I think in the next 2 to 3 years, it will be even more evident than it is today.
Great, great. And using all of this technology, you're also perhaps generating humongous amounts of data. What exactly are you doing with that data? Are you leveraging, data analytics? Are you getting insights? Is a lot of your decision making as a business leader dependent on your data points that you're generating?
Absolutely. I mean, in any larger organization today, I think AI and analytics plays a very, very large role. And, we as SIS process huge amounts of data, whether it's the volume of ATM transactions or the number of times a toilet of a railway station is visited,
right,
or the number of times a site in a remote location was checked at night.
So are you sending these data points, these insights from this data to your customers as well?
Well, we do share a lot of these insights, but what we actually do with this data is we actually synthesize this data to develop benchmarking internally. So I think data is extremely essential. SIS has a massive data bank now,
right,
of security buyers, facility management users, and a lot of patterns of how things happen in these domains. And I think that data is very, very valuable, and we look forward to using analytics and AI increasingly over the coming years.
Let's talk a little bit also about your advertising and marketing strategies. I know that you've undergone a transformation from telling the consumer that you're not just about security services and you're about a lot more. So what are the sort of activities that you're looking at in the near future?
Well, SIS is not a consumer brand as such, so I mean our advertising is not
B2C.
a B2C style advertising. We are a B2B business, so we spend a lot of our energy in sponsorships. We need to be seen at the right forums. We spend a lot of our energy now on social media outreach,
right,
and such events and other things that we do constantly. We are looking now to increase our visibility though on mainline ATL media, and I think you'll see SIS participating a little bit more there, but not comparable to your consumer brands, but yes, a little bit more.
Yeah. Great. So as far as expansion plans are concerned, what are you looking at next? Are you looking at newer geographies? Are you looking at further diversification of products? And immediately, are there any acquisitions on the anvil?
For a asset-light business like us, which is annuity revenue model,
yeah,
and little to no gestation period, I mean, what we want to be achieving is a 20% year-on-year growth. We want to keep our return on equity greater than 20%, hopefully close to 25% over time, and operating cash flow to EBITDA around 50% or greater.
Right.
So that sets up a business self-funding business, growth funding business over time. Looking ahead, the big opportunity ahead of us is clearly to tap the humongous opportunity of India. In our country and a market as large as India, yeah, which is growing at 18-20% year on year. Being a market leader in security is phenomenal, but if you can have an engine 2 and be a market leader in facility management as well, and a market leader in engine 3, which is cash logistics, I think that's a tremendous opportunity. What we need to execute towards now is to going from a 4% or 5% market share to a 10 or maybe higher market share in the next 3 to 5 years, and that's what we are planning towards.
Okay, great. And also these are times, challenging times for the debt market. So in that sense, what sort of a capital structure are you looking at?
Well, if you look at the SIS balance sheet, our total debt right now, net debt to EBITDA, stands at 1.1x. So I think we are quite comfortable as far as our gearing is concerned. Add to that the fact that our average cost of debt is 7.5%, which is a result of the fact that we raise a large section of our debt, part of our debt, overseas in Australia, which is at substantially lower cost. So I don't think we have much of a challenge there. We continue to sort of look at our debt profile very prudently.
So your one-line vision for SIS Group, maybe for the next decade, where do you want to see it 10 years from now?
Well, 10 years is a very, very long period of time. We are in the process of building our Vision 2025 document. Going forward, it's about building a multi-billion-dollar enterprise, an enterprise that can not only deliver shareholder returns, but also create jobs and support our economy and society through skill development and job creation.
Great. We wish you all the very best and hope you meet all of those aspirations for Vision 2025 as well. Thank you so much, Rituraj, for joining us on the show.
Thank you so much for the opportunity. Thank you.
Well, with that, it's a wrap of this episode of Incredible Journeys, Brands and Leaders. We'll be back next time with yet another exciting tale of business success from corporate India. Thank you for joining us. Goodbye.
Focus, ideate, innovate, enable.